removed by the Supreme Court. Now government is planning to come up with this cryptocurrency and regulation of official digital currency bill. In this bill, what has been proposed that this government is going to ban the cryptocurrencies.
Subscribe and press the bell icon so you never miss an update from PrepLadder.
NPCI, that is NIPL, NPCI International Payment Limited. So this is promoting RuPay and UPI outside the India. Okay, so this was all about this news. Okay, now coming to the next important area of discussion, that is related to the cryptocurrency. So if we talk about cryptocurrency, that is a kind of high heated topic, and that remains in news always. So what is the concept behind the cryptocurrency that you should know first? This is a kind of virtual currency which works on the principle of cryptography. What is cryptography? If I talk about this cryptographic technique, for example, if you have to store this information, let's say this is A information. So you have a particular process, okay? And after that, B information is there, C information is there, D information is there, E information is there. So this will be arranged in a pattern A, B, C, D, E. This pattern will be very unique and unbreakable for manipulation of the information. Means you cannot manipulate this information B without having the approval of the whole decentralized system. Let's say there are n number of computers are there. This is one computer, the 2, 3, 4, 5, 6, 7. So these 7 computers will approve that this knowledge is to be amended. Means it would be, we can say, kind of impossible thing if these computers are lakhs in numbers. Means if this once information A is stored, then this B is stored. Means now the chances of manipulation or amendment of this informations are not there. Means there will not be this possibility is very less, or we can say no possibility is there. Before you want to change the amendment, or if you want to change the information, we'll have to take the permission of these all decentralized ledger system. Okay, so this is the cryptography. Once your information is there, that is going to be very intact for sure. And remember, this information will have the access to all the decentralized computer systems, or that is also known as decentralized ledger system. Okay, so this is the concept of cryptography. Now, if we talk about the virtual currency or the cryptocurrency, remember the currency which is virtual in nature. The second thing is this currency is very decentralized when it comes to its operation. Means you can have your own currency, this person can have their own currency. Remember, this will be very unique concept where this information is, again I have talked about this, very much secured. And the most important thing is this is not being regulated by any central bank of the world. Means this is free from the regulation. This is also a kind of risk which is involved in cryptocurrency. What if this cryptocurrency will become of zero value in future? If you are having this money, but in future this is of no use, because that is not being regulated by any central bank, that has no legal backing behind this, that has no intrinsic value as well. So these are the risks involved in the cryptocurrency. Okay, so this is the cryptocurrency. Now if we talk about why this is in news, so we have RBI came up with a ban in 2018 on these cryptocurrencies. Later this ban was challenged in the Supreme Court, and Supreme Court said this cryptocurrency is something which is out of your regulated areas. Means you cannot regulate because it is not your area of expertise, or this is not the area of your regulation. Okay, so this ban was again removed by the Supreme Court. Now government is planning to come up with this cryptocurrency and regulation of official digital currency bill. In this bill, what has been proposed that this government is going to ban the cryptocurrencies and to have the virtual currency access to its citizens what we are planning to come up with our own virtual currency, and we'll see also how this currency of RBI backed system is going to be very distinct from the cryptocurrency. That we'll talk about this one. So if we talk about the cryptocurrency, this is the digital or virtual form. This is secured by the cryptography. We have talked about this cryptography technique. This is the decentralized network which supports this cryptography technique. We have seen that one also. Remember, this is not issued by any central authority, and that is where the government cannot interfere into the matters of this cryptocurrency regulations. Okay, so this is the cryptocurrency. Now if we talk about the adoption rate of cryptocurrency, so this global crypto adoption index was released by this Chain Analysis. This is a platform on crypto. So according to that, India is the second in top 20 countries which has the highest cryptocurrency adoption rate. So this is here you can see why we need to regulate these cryptocurrencies, because we are adopting these cryptocurrencies at a very faster scale. Although we are utilizing this cryptocurrency as a kind of medium for the investment, but still the risk involved is very high behind this cryptocurrencies, and that is where we need to regulate this cryptocurrencies. Okay. Now, if we talk about this India's CBDC, that is central bank digital currency, that has been proposed under this bill we have talked so far about. So in this one, we are going to launch our own virtual currency in the next financial year, and we have also planned to come up with the 30% tax on the virtual assets. Means those currencies which are being virtually traded, we are going to have 30% of the tax as a virtual tax on these currencies. Okay, so this is the news. Now this CBDC that is being proposed by this government, so how it is going to be, first thing is how it is going to work. So first thing is, it is going to be the legal tender. Means you cannot refuse to accept that virtual payment. This is legal support has been provided to them. Means the central bank would be the one which is backing this currency in our country. You cannot refuse because this has been the status of legal tender. The second thing is, this would be numbered as well. Means if you see the notes of the bank, they have their unique numbers. So in the same way, this virtual currency would also have the numbers. Okay, so this is again the second thing. Now if we talk about the differences between this CBDC, so how it is going to be different to the cryptocurrency. Remember, the concept of both the currencies is somewhat similar when it comes to the working. Means they both will utilize the cryptography technique or the blockchain technology. Okay, so this is the similarity between them. What is the difference between them? This is going to be regulated. This is CBDC is going to be regulated by the central bank, that is the RBI, and this is where we can say this is a fiat money. Means the regulation would be there by the central bank or the government. But when it comes to the cryptocurrency, that is not going to be regulated. This is for sure. This is a legal tender in our country. You cannot refuse to accept this virtual currency, but in case of the cryptocurrency, that has not have this legal tender status so far. Okay, so this is the basic difference between this CBDC and cryptocurrencies. Okay, what would be the similarity? Similarity that when it comes to their working, that is blockchain technology would be utilized by both of them. Virtual would be the nature of their transaction would be virtual in manner. What would be the impact? What would be the benefits of this virtual currency? Why we are coming up with this one? Because we want to reduce the cost of transactions. Means virtually that can be traded. You can virtually store the amount of this money. And the most important thing, the physical cost of printing the money, the physical cost of transacting that money will be reduced for sure. Okay, so this would be the concept of this CBDC. Now there was a proposal we have seen so far. 30% of the tax would be there on the virtual assets. And in this virtual asset, one important concept is that is non-fungible virtual tokens. Okay, so what is this non-fungible virtual tokens? Let's say if I talk about this virtual token and the cryptocurrency, they both work on the principle of cryptography. Means we have so far understood that once the information is generated, that is going to be very unique. This has no chance of amendment until and unless you are taking the permission of whole decentralized computer systems. Okay, now for example, let's say this is a painting, very unique painting of, let's say, very unique painter. For example, if we say this is the painting of late MF Hussain Saab. Okay. Now, he has a certain number of paintings, 1, 2, 3, 4, 5. Okay. And this is the original painting 1. Okay. Of this MF Hussain. Now, if he wants to sell, or if he wanted to sell, or some other person is there who is live now, if he wants to sell this original painting, so he can sell to person A. Let's say this is a person A. Now there would be, for sure, there would be many copies of this original painting. So in this cryptography technique, in this non-fungible virtual tokens, this painting would be provided with a unique number. Let's say this is 0xVPP3627. Okay, this is the code. Now this code would be for this original painting number 1, and that will remain always intact. You cannot change this information. Means this proof of originality would be there with this one. And how you are going to provide this number or this token with the help of cryptography. You cannot change this information. This is the basic concept of cryptography. So in this way, this painting would have original status always with it. You cannot make the proxies, and if you are going to make the proxies of this painting, that would be for sure can be cross-verified with this original token number. Okay, so in this way, this virtual token system will provide a virtual token to the original creations. This creation can be original music, original painting, original work of any art form. So this can be traded on virtual platforms as well. So this is the benefit of this non-virtual fungible tokens. So if we talk about this tokens and cryptocurrency, remember both are working on the principle of cryptography. Now what are the difference? The difference is these cryptocurrencies are fungible in nature. Fungible means if you have one coin of a particular cryptocurrency, let's say you have one Bitcoin, and if you have another Bitcoin, they can be replaced easily because they hold the same amount of value with them. This coin 1 of this Bitcoin would be equal to the another coin of the same Bitcoin. Okay, so this is the fungibility. Now, if we talk about these virtual non-fungible tokens, why they are non-fungibles? Because this one painting have the different value. The another painting which is having the certain another token number would definitely have the another type of the value. They cannot be replaced or reversed by transaction. Okay, so they will hold a different value, that is for sure, and that is why we say that they are of non-fungible nature. Okay, so this is the difference between cryptocurrency